Friday. I hope everybody's doing well. Not that everybody's joined quite yet, but that's okay. Kind of like I said, I know nobody's used to the lives, so it's all cool. And you guys can just watch these as a video. Not sure how long I'll ramble for, and we'll see if some people join and I'm able to respond to some questions. I will read the questions if they come on. Those of you who don't know me, my name is Adam Kahn, and this is Investing with Adam K. I hope everybody's got some fun plans for the weekend with it being Halloween. So we got some trick or treating for my son. I'm sure I'll hand out candies at home while they go out. It's kind of cool. One of the neighbors does this whole, they get, not like the neighbors in my community, one of the communities near here, they all kind of band together and they get some food trucks and other things. So even kids who aren't really young are able to enjoy the fun. It's not just intended for super young kids to go out and trick or treat. It's fun for their entire development. Before I get into it, before I go, as always, I am not a financial advisor. Nothing that we talk about today is financial advice. Please, you need to do your own research, reach out to a financial advisor, and you shouldn't be listening to me or anybody else on YouTube for that matter. So, markets are not doing a whole lot of anything today, bouncing around a bit after the Fed's announcement. Amazon obviously had great earnings and they've shot higher. Things that are looking attractive to me, both Meta and United Healthcare, which I'll get into, both of them are looking really attractive on the pullback. I think if you can pick up Meta, and again, not financial advice. How you doing, LaCroix? Hope you're having a good day. But I think Meta here trading it, if I remember correctly, it fell back down to about $650 a share. I think that starts to get really attractive for a company like Meta. Um, it's my largest position in my set it and forget it account. So I really, other than just playing around with a tiny bit of it, I'm not putting on a huge trade, but I did buy a tiny bit just to kind of hopefully pat myself on the back in case it does okay. But outside of that, I think 650 is super attractive. And I saw United Health fell below $340 a share today. To me, that's a really good level to be getting into it. Now, maybe it works out, maybe it doesn't, but I think that the pricing is getting really attractive, anywhere around $340. And what I've been doing in the trading account, if you guys are curious and kind of want to play along a bit, is I've started using options a little bit more. So I went out until approximately a month, and my goal is to get more than 1% on options that I'm looking at. Um, so the November 28th $320 put, I think I got $5.10 for it or something. I'd have to take a look, but I'm using my phone, so I don't remember exactly. And the other one that looked attractive to me today was actually Starbucks, which uh, it's just so unloved, and it's been unloved for a long time. But I really like their CEO that they brought over from Chipotle. I'm not sure how many are familiar with it, but his name's Brian Nickel, and he's the one who really drove Chipotle the way that it did. And ever since he left, they've really struggled. I mean, I'm actually beginning to look at Chipotle here after their bad earnings as well, because I think they'll be just fine. Like, to me, I think of them similar to McDonald's. You're not going to crush it, but if you're looking to hold something for 10 years, like maybe they go through a rough transition as we've had some inflation and it's not as cheap as it used to be. But I got to imagine in 5 or 10 years, the earnings in a company like Chipotle will be just fine, and the company's going to do as well as inflation or better. I don't see it like crushing it or hitting it out of the ballpark, but after the earnings miss and the stock dropping so much and people getting really worried, like, to be fair, the basics are most people's brains are pretty short term. So you have to think longer than most and stick with it. And right now, people are really worried that Chipotle's sales are going to continue to lag, that it's gotten expensive enough that they're just not going to be able to grow. And sure, that might be the case for the next year or two, but that's why I say in 10 years, I got to imagine they're okay, because I don't see Chipotle being that much more than McDonald's as far like the prices have gone up, But if I go to Chipotle, my buddy and I, we go to lunch. We've slowed down. We haven't had a chance recently. We got to go to lunch. Um, Maybe once every week or two, and most places end up costing. Man, it runs us like $40 or $50, and we're always a little bit shell shocked because we're not going to anywhere fancy. We're going to plain old, places you may not have heard of, but Crazy Pita is one of them, and we're always a little bit surprised when we get the check. When we've gone to Chipotle a couple times, and we've been surprised by the check, but the other direction. It's one of the least expensive places we go. So as much as the prices have gone up and it's probably hurting their sales, the reality is it's still one of the least expensive places to go for lunch. So I picture in time people will get used to prices being higher than they used to be, and Chipotle will be one of the winners in the space because they put out a decent product, and it's healthier than going to McDonald's, and you feel a little better about what you get. And I don't know that it's any more expensive than Subway, McDonald's, Burger King, Wendy's, some of the really cheap, inexpensive stuff that we think of. So either way, Starbucks, which is what I was originally talking about, looks like it's gotten pretty attractive to me. I mean, it's close to $80 if I can get in around what I did, similar to United Health, is I went out to the same date because that's the quarterly or monthly option is the 28th, if I'm correct. I might be wrong. Feel free when this comes out as like a video to put in the chat if I'm wrong, because I do, I don't know if you guys realize I read every comment, I respond to them. I'm happy to have conversations about things, so that's just fine. But I'm happy to pick up Starbucks if it gets down to $76 a share. And I was able to sell a put for, I think it was the 28th, and get 88 cents. Well, that's more than the 1% I'm talking about. And the reason I try to get more than 1% is my attitude is if I'm getting 1% return on a monthly basis, that's a 12% annualized return. I'm pretty comfortable that I can find different stocks that I can sell a put in and continue to collect 1%, even if stock rallies and I'm not able to pick up the shares. And if I am able to pick up the shares, like with the comment about Starbucks, if I pick up 100 shares of Starbucks at $76, I'm happy to buy it there. And if you're doing these types of strategies, you just have to make sure that your account is liquid enough and has enough money to continue with that process. So let's play it out. Let's pretend in a month that Starbucks has fallen and it's down to $73. And obviously that put sucks. I only got 88 cents. I'm buying 100 shares at 76. It's $300 against me on the stock. I've collected $88. Well, I want to be in the position to be able to sell another put the same distance below another month out, maybe at the $68 or $67 put is what I would be looking to sell at that point. So hopefully to collect a little bit more premium, and then I might also sell the call. Hopefully I'm able to sell a 78 call so that I can break even on the trade of the stock and collect a little more premium now for the call that I sold. If I'm fortunate enough and the stock goes back up to where I now sell those shares of stock, I bought the shares and sold the shares at 78 or 76, forgive me. So I've made nothing on the stock transaction, but I made the 88 cents on the put that I sold, whatever I might collect for selling a call. And since I was flush enough to be able to sell another put, maybe I collect another 88 cents from there. Now, it's not a lot of money, but it adds up. And if you're making 1% on average per month, you're getting 12% return. You're then able to sell additional puts. You're doing a little bit better. And my goal is if I'm lucky, I should be able to make 20 or 25% annually. I guess we'll see how it's worked out. It's relatively new for what I've been doing, but I've actually really enjoyed it. It's making me more patient with the stocks and just kind of watching where they move instead of worrying about the day-to-day fluctuation so much. I check a lot less often. It gives me a whole lot more free time to do the videos, to spend with my family. To We're actually having a couple of bathrooms redone, so if I end up having to cancel early, I just got little notification that the garage door closed and it shouldn't have. So I guess we'll see if somebody comes out and grabs me and says, "Hey, I need the garage door open." Um, so on, sorry, I get these little blips every now and then. And I think it's somebody asking a question. It's a suggestion that I ask to people, which is it hot or cold where you are? Not really sure what that has to do with the markets or anything, but YouTube gives this little thing. It's a little bit distracting. Out here, it's absolutely stunning. It's a perfect time of year, so I'm super psyched about it. Um, but I don't know, in the comment section, forget whether people ask questions here or not. Did you buy anything this week? Did you sell anything? You know, in my trading account, to give an idea of the things that I do with options in reality versus I mean, I did sell a put in United Health and I did the one in Starbucks, but I happen to have 200 shares of Amazon. I was short a $240 call that I collected about $3 that I had sold it at the beginning of the week. And obviously Amazon, at least when I started the video, was significantly higher than the 240. So I assume that those 100 shares are going to be taken. I will be forced to sell it at 240 a share, which is just fine by me. That was the goal of the option. I am then reversing, and I went another 2 weeks out, and I sold a 235 put, and I collected, if I remember correctly, a little over $2. And again, so the theory is I collect the $2. If the stock just keeps going higher, I get to keep the money. And if it falls back down, well, I've sold 100 shares at 240 and I've bought it back at 235, making 500 bucks there. And again, I'll get the premiums I've collected. So Tom is asking, and I'll get to the questions, and I'm saying it for those of you who are watching later. Do you expect some Netflix momentum with the upcoming 10 for 1 split? Not sure why this happens, but it does sometimes. As far as I'm concerned, Tom, 100%. I don't understand it either because it actually means absolutely nothing for the company. It makes no difference. They're just dividing your shares, lowering the stock price. But for some reason, when they announce something like a 10 for 1 stock split, the market gets overexcited. And my guess is, yeah, we'll see Netflix go higher over the next few weeks or months until the split actually occurs. And then the stock will go wherever the stock goes. But I never understand it. It makes no sense because really, who cares if you have, 100 shares at 1,100 or 1,000 shares at 110? It's really the same thing, but people seem to have some misunderstanding. The only thing it does is it helps the retail investors a little bit because, if they want to own 100 shares to be able to trade options with, it does open that up a bit because most people aren't going to want to put, $110,000 to buy 100 shares because it's a decent amount of money, whereas they might have the 11,000. But it's still kind of silly to me. But yes, I do expect it to drift higher. I think it'll have some momentum, but it's kind of silly to me. Again, not financial advice, but that is my thought on what'll happen on Netflix. And to be fair, I think Netflix is a great company, and I really missed the boat on it. When the stock fell to 100 and change, and my brother mentioned it and was like, "Geez, maybe it's worth buying here." And my attitude was like, "What do they offer that anybody else can't do? Like, it's just a streaming service." And I'm a little surprised that Amazon and Google and Apple haven't been able to compete on a better level, but they haven't. And Netflix has built up a name. And even if we have a recession, one of the things that I love about Netflix is their subscription is so inexpensive, especially the one that has commercials. I think it's like $7.99. It might even be $6.99. Who's going to cancel $7 a month because we have a recession? Like, maybe they do, but that's one of the things I really like about Netflix is I think it's almost recession proof. And I almost think you'll have more people sign up because maybe they don't go out to dinner and they get themselves Netflix because they can stay home, they'll cook dinner, and they'll watch shows on TV. Now, maybe I'm wrong. Now, for us personally, when we moved right when COVID started, and we cut the cord for cable. And I'll tell you what, once you do, like we have Netflix, Amazon Prime, and the interesting thing is I didn't realize when you buy a TV, at least Samsung, like there's some free channels that come with it, including the news and whatever else. It isn't the live news that you get when you pay for cable, but it's basic news, so we don't have Cox TV anymore, and it just doesn't make sense to me that why people still need cable. We don't miss it anymore. Hi, Abby. Hope you're doing well. So Chef Jordan official is asking. He's 23. What advice do I have for him? So the reason I started this channel, and oh, thanks, Abby. I appreciate that. Is to try to encourage people to save for the future. And I'll tell you a story I've told a dozen times, and maybe you haven't heard it, because it really doesn't matter how little it is. At 23 years old, what your greatest asset is the time. There's an old saying that time in the market is more important than timing the market. And I'll tell you what really got me started and what I regret, and give you a little bit of the math of how incredible the time and compounding really is. So when I was a junior in high school, and this goes back to like 1988 or 1989, my grandfather was kind enough. He gave all of his grandkids, there are four of us in the family, he gave each of us $10,000, which was a ton of money back then. So my mom, being my mom, was a little protective, and she took it from all of us and said she'll put it away. And like, it wasn't not our money, but she didn't want a bunch of kids having that much money. Me personally, she probably thought I would go buy a motorcycle with it, because at that age, that was kind of what I was into. So I remember going in a room and telling her I'd like my money, and her saying, well, what do you want it for? And I'm like, well, I want to buy stock with it. And I know I really shocked her, because I still picture the reaction she had. And she looks at my stepdad and she's like, okay, well, go write down what companies you want to buy and we'll talk about it. And then, sure, as long as it's something they're comfortable with. So the companies that I wrote down, and she said just fine when I gave her my list, was Chrysler, which I assume you guys are familiar with. I think it's Stellantis now. Eastman Kodak, General Electric, McDonald's, and there's always one other that I never remember, but because I know there were five. And show her the list, and she's like, okay, let's go open an account and you can buy those. So I did. The point of the story is Chrysler went out of business, so it went to zero. Eastman Kodak, for any of you familiar with it, they went out of business. Same thing, zero, from what my investment was. GE that you see on your screen is not the same GE that I bought at the time. Now, GE paid me a bit of a dividend and I got out, but I'm pretty sure it went to zero as well. Obviously, the one I don't remember. And then we'll talk about McDonald's. When I bought McDonald's, there were already stories about grandmothers putting $1,000 in McDonald's and becoming millionaires. So this was not some new company. It was not early on in their career. It was well established. It was what it was. There were tons of them everywhere. And there were all those stories of getting rich off of it, which to me reminds me of Amazon, Google, Meta, like all of Microsoft, all of those companies today. No different. Well established big company. Had I left the $2,300 that I put into McDonald's, not only the dividend that I was collecting at the time, which was $6, is now, geez, it would be way more. It's over $100, but it's split 3 times. So instead of 100, I would have 800 shares. So I'd be getting $800 every quarter in a dividend on a $2,300 investment, and it would be worth over $250,000. So the point being, Jordan, that at 23 years old, even if it's only a couple $100, my goal is for people to save and put away, because in 40 years, which is how long that's going to be, I think you'll be pretty shocked about the compounding. The other thing about that timeline, McDonald's fell in half 3 or 4 times along the way. They had mad cow's disease. They had other things that happened. I think they had the mad cows twice. And the stock would collapse and then go back up. Now, I made the mistake each time it split that I was all too excited to sell 100 shares and keep 100 shares because I felt like, ooh, I could go sell it and buy myself something and still have 100 shares. But I really regret it because, like I said, it would be real money. And I only put in $2,300. 23, and even if you take it as the 10 grand that he gave us and include that as the total investment, it would have been 10 grand into a quarter million, plus I'd be getting an $800 dividend every quarter. And I don't know, maybe if I put it in a dividend reinvestment, I don't even know how many shares it would be, and I would have crushed it. So I encourage everybody, whether it's an ETF like VOO or QQQ or SPY or SCHD or whatever, even if it's $50 every month or whatever you can do, just put away and save. I wouldn't, I don't have specific companies, but hopefully it kind of gets the point across. And I see you saying, wow. So, Jordan, I hope that really encourages you to save for the future. It's amazing how much it does compounding over time. And McDonald's was super conservative. I didn't buy, I don't have anything from back then because I wasn't informed well enough about knowing the crazy risky stuff, but it wasn't any Palantir or something that's really been lucky. Oh, good. I'm glad that helps. It was big old boring company. Like that's why I said it wasn't anything early on. It wasn't something, uh, and I would suggest, if you don't if you're not watching the markets and you don't follow it too closely, VOO, QQQM, like those are just kind of investing in the market. If you're not familiar with it, VOO and SPY are not individual stocks. They are what are called an ETF for exchange traded funds, and they are both the S&P 500. So all the money that goes into VOO and SPY, yours and all the other thousands of people who buy it, has a computer algorithm that designates the correct amount of money into 500 different stocks, weighted by the largest to the smallest in the S&P 500, and it is a good way to invest in the market as opposed to having to pick individual stocks. Since you're only 23, QQQM is the NASDAQ. It is only 100 stocks, but it's the tech companies, so it will have bigger ups and downs, but it should outperform. Again, not financial advice. None of this is a guarantee. Markets do whatever markets do, and past performance is no prediction of future. But what I love about these funds is they automatically wash themselves. So with the S&P 500, it is not literally the 500 largest stocks, but it's pretty close to that. As a new stock starts to grow, what'll happen is the new one, as it's growing, will get added to the S&P 500, and another one will get taken out of it so that they're 500 stocks. So the ETF is always cleaning itself. You're always having the proper amount invested in each one. They're great ways to just invest about in the market and not pay attention. It's actually, so my son is 14. I've essentially told him, he wants to be a lawyer. I'm like, look, if you end up being a lawyer, VOO, QQQM, and don't even pay attention or don't think about it. Just split it up into certain percentages. You never have to pay attention to the stock market if it's not what interests you. Now, I do teach them more, and I teach them a little bit about options and selling options as well. Only because if he gets an interest in the market, I would like to have him a little bit better of a knowledge base. But in reality, if you don't care and you don't want to know, there are options out there that really fix those solutions, and it saves you the money of an advisor. Now, I still advise people to have an advisor because we all have our own. You have to be really introspective, and sometimes I find when money is in somebody's hands, they control it differently than by it being in an advisor's hands that protect us a bit. And maybe it's in the same things, but my point is it's a way to avoid the fees and everything else because they have super low administration fees. If I remember correctly, it's like $20 for every 10,000 invested. It's like 0.02% or something like that, or point or point 0.2, but the fees on the ETFs are extremely low. It's been the newfangled version of what we had as mutual funds when I was a kid. And mutual funds have significant fees, but the ETFs are just computer algorithms that automatically disperse the money properly. And then if somebody is a little more conservative and wants dividends, there's a Charles Schwab one, SCHD, that I think is also an excellent ETF. So I find these are really good avenues if somebody could care less about learning about the individual stocks. And if you do want to learn about the individual stocks, the other thing that's nice about today's world versus when I was a kid is commissions. I mean, you can buy fractional shares, which never existed. And on top of that, commissions were really expensive. I mean, when I when I had that gift from my grandfather, it was the first time Charles Schwab had just opened. Previous to Charles Schwab, it was like Smith Barney, J.P. Morgan, and the others. And placing a trade to buy the stock would cost, $500 or so. It was absurd. Charles Schwab, if in my memory, there might have been others. I know there were things like Oldie and some others that came around that competed with them, but I think Charles Schwab charged something like $49.99, and it was this new amazing thing that nobody had ever had before. So it was really cool to have discounted. Now it costs zero. So you're able to buy one share and fractional shares and all sorts of stuff. And you can even set up with automatic investment, which I would probably recommend for somebody so young. And then I would optimize if you work for a company that has 401ks and retirement plans and they do matching and things like that. Take advantage of whatever you can and get a Roth IRA because the tax savings are unbelievable. And the way that a Roth works is you owe your normal taxes and whatever else, but you get to leave it in there, and the growth over the next 50 years, let's see, 23 to 73, yeah, over the next 50 years, whatever that does and however it grows over the next 50 years, when you sell it, it's tax free, which is really amazing because the government is in all of our pockets. So anywhere that you can save taxes is just friggin' awesome. Anyway, I can hear the workers and they've got questions. If anybody has a question, feel free to ask. But outside of that, I'm just gonna go deal with the stuff that's going on in the house, and I'll try to do another live either this weekend or I'm going to stick to Tuesdays at 11 o'clock. I'm also going to try to do one with Jacob, but with it being Halloween and everything else, I know we have a bunch on our plate. I just don't know how busy it'll be. Outside of that, do me a favor if you haven't already, hit that subscribe button, smash the like button. I really appreciate it. Again, I'll try to do a live this weekend, but I really need to go answer their questions and see what's going on with the garage that closed. So have a great day and make comments in the comment section if you have more questions. Happy to answer them. Bye bye.